Dell reports earnings after hours today on the 28th, and there's a high probability that somebody knows something. I've been paying close attention to the option chain over the course of last 4 or 5 trading sessions, and someone's been accumulating a good number of puts, as in buying put options on Dell. Now, considering the technology sector has been doing quite well over the course of last few months, specifically, it is not the kind of action that we see in technology stocks going into earnings reports. So actually quite the opposite. Normally, we see a great number of call activity, in some instances as much as 2-3 times that of the put activity. And so considering this was not just a one day on which the market maybe was pulling back a little bit, considering this has been consistent action over the last 4 or 5 trading sessions, somebody's been buying puts on Dell very consistently. So it tells me that maybe somebody just knows something. And what could they know? Well, maybe they know that that Dell is going to miss on earnings again. So I spent a little bit of time explaining how Wall Street likes to punish companies that, they'll give you a benefit of the doubt if a company misses like one quarter, but then the next quarter they'll basically expect the company to correct its act and report something good. Now, sometimes what could misfire is if a company reports a bad quarter, and what analysts could be doing is lowering their estimates going into the next quarter. And sometimes when a company reports, in contrast of what normally would be considered a bad quarter, because the expectations were lowered, the numbers look not as bad. So in that instance, the company may not drop. But in those instances, we go to the chart to decipher what's really the case here. So the chart points to some major selling that preceded last week. There's some big volume on the sell side. And since then, the stock has bounced. So ideally, what we want to do, we want to short a stock on a bounce, utilizing put options. Especially, ideally, your final confirmation would be a black candle. So if you go to stock charts, check out a Dell shares utilizing the candle volume on maybe a 3-month, 6-month chart to give you an idea of how low it could actually drop. In the process of doing that, you'll see there's a black candle created exactly today going into the earnings report. So that tells us people are rather anxious to unload some shares. So there's definitely going to be selling. The question is, what strike would you go with? So considering the chart, Dell shares can easily drop to a level of 120. Now, don't be in a rush to be buying 120 Dell puts, okay? Those would only pay if Dell would drop below $120 a share. So when you select your strikes, you want your strike price to be above your target price. So in this particular case, as I'm recording this, Dell is trading around $134 a share. So I would want to, if my target is 120, I would want to select a strike price that would be above that level. Now, clearly, you can go in the money 135, super safe and secure. Now, of course, those are going for around $5. So if Dell was to drop to a level of 120, triple your money pretty quickly. Now, if you were to go with the lowest strike, your payout could increase. You could possibly do 4x, 5x. In the event that Dell could reach the next level, which would be below 120, well, in that case, all these strikes would pay out quite a bit more. But the next level in Dell would be like 112, 114 area. So there is a chance, depending how shockingly bad this report is going to be. It's not a matter of whether it's going to be bad. The report is going to be bad. Probably a miss on earnings per share. Probably a miss on sales. Probably a combination of both. But of course, more than anything, Wall Street is going to be looking at the guidance. I'm not sure how Dell is going to be able to pull off a great looking forward guidance. So that basically seals the coffin for Dell right there. Be mindful when you select the strike prices, guys. But when you take some very bearish options activity, combine it with a chart that definitely has probably about 8 to 11 various bearish factors written all over the chart, such as divergences and etc. This trade's got I would say this trade's got a 99. I think we're looking at 99% probability of Dell dropping after hours today. And then it just becomes a matter of, okay, by how much, which I sort of stated by how much based off the chart it could drop to. And you should always take a look at that before you select your strike prices. So with that said, guys, the market today is struggling at all-time highs as far as the S&P 500. Don't miss the next podcast. I'm going to record going into detail about the very critical component. Oftentimes, you need the market, a catalyst to drop. Well, I think the market is ready to sell off in the absence of a catalyst. Clearly, we could be thinking, well, next week job report, so on, and there could be a number of things happening over the weekend. But, normally you wouldn't expect a sell-off going into a Labor Day weekend. Monday, the market's closed. So very high probability that options are going to be dirt cheap tomorrow, and they're already like dirt cheap today. So it's only going to take like a 40, 60 point drop on S&P 500 to put together a crazy fucking wild trade. And so I'm going to break down the specifics in the next podcast, guys. Don't miss it. Enjoy the Dell trade. Let's roll.